Oil hit $100 a barrel. For the first time since July 2022. It crashed stocks, spiked inflation fears, and scared every central bank on the planet. Then, it fell back to $90. Here's the full story in under 2 minutes. It started with one thing: Iran. When the US-Iran conflict escalated, Iran began targeting oil infrastructure in neighboring states. The Strait of Hormuz, the choke point for 20% of global oil shipping, became essentially impassable. Supply collapsed overnight. Brent crude hit $101 per barrel, WTI hit $115 at its peak. That's an 80% rise in US crude in a single year. Here's why $100 oil matters to everyone, not just traders. Every $1 rise in crude adds 2.5 cents to gas prices. At $100 oil, gas hit a national average of $3.45 per gallon, with $4 looking very likely. Diesel threatened $5 per gallon. Transport costs soar, food prices rise, everything gets more expensive. This is how oil becomes inflation. And here's the real problem. When oil spikes, inflation goes up, central banks should raise rates. But raising rates slows the economy. So central banks face an impossible choice: fight inflation and crash the economy, or support growth and let inflation run. Vanguard called it a classic stagflationary shock, the same dynamic that wrecked the 1970s economy. So why did oil pull back to $90? 2 reasons. First, China. Chinese crude imports fell to their lowest level in 10 years. Less demand from the world's biggest buyer equals lower prices. Second, Iran talks. President Trump said discussions with Iran are progressing. Any ceasefire hint equals oil drops fast. But analysts warn, as long as the Strait of Hormuz stays disrupted, oil stays volatile. Oil at $90 is still 40% higher than 1 year ago. The inflation pressure isn't gone, it's just paused. Watch June 10th, that's when the CPI inflation report drops. If energy prices keep feeding into CPI, rate cuts are dead. Rate hikes become a real conversation. Full breakdown on our channel. Subscribe to CapitalClarion, Business and Finance, every week, no noise.